Ladies and gentlemen, good day and welcome to the Sandhar Technologies Limited Q3 and 9 months FY24 results conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Jain. Thank you, and over to you, sir.
Thanks, Tushar. Good morning, everyone. On behalf of Dolat Capital, I welcome you all in third quarter and 9-month FY24 conference call of Sandhar Technology. From the management side, we have with us Mr. Jayant Davar, Co-Chairman and Managing Director, and Mr. Yashpal Jain, CFO of the company. We thank the management for providing us the opportunity to host the call. Now, I hand over the call to the management for their opening remarks, followed by the question and answer session. Over to you, Jain, sir.
Good morning, everyone. Thank you, Abhishek and Dolat Capital, for putting this together. Let me also thank all the participants who agreed to join early this morning. Let me begin with some good news. Some of what that you heard yesterday already. I'm talking from Delhi. Nice sunny day today. So let me begin by saying that Sandhar, your company, has performed well. In terms of our quarterly performance, we've had a revenue growth of 23% year-on-year to 892 crores. Our EBITDA has grown by 34% year-on-year to 91 crores. And the biggest thing that I think all of you expected, and we wanted to reach that golden number, was a double-digit EBITDA percent. We are at 10.2% in quarter 3 versus 9.3% that we had in quarter 3 of last year. PBT is also up at 39 crores versus 27 crores. PAT has grown by in terms of PAT, we are up 43%. Like I said, revenue up 23%, EBITDA up 34%. If I look at year to year, which is 9-month period, our revenue is up 21%, EBITDA 34%, and EBT at 51% up. The numbers are good, and this is a start of better utilization of our capacities and utilization of the capex that had been done by the company in the last several years. We are now bearing the fruits, and we expect and hope that this journey will now continue on this growth path going forward. I'm also happy to say that this enormous growth that we are likely to see and are seeing goes with our tagline of growth, motivation, and better life. The Indian automotive industry is evolving with a focus on electric vehicles and sustainability. And Sandhar, your company, is committed to leading in this transformation and experiencing serious growth. So our focus stays on innovation, sustainability, and in offering eco-conscious solutions for the industry. In the EV space, we are progressing very, very rapidly and satisfactorily on 3 product lines: DC-DC converters, EV chargers, and motor controllers, with large plans for the future. So I'm going to stop here and then answer your questions. With me today is Mr. Yashpal Jain, our CFO and Company Secretary, who will assist in answering your questions to any specific areas that you might decide to ask for. Thank you.
Should we start the question and answer session?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Gaushinde from Sharekhan. Please go ahead, sir.
Thank you for the opportunity. So, sir, first of all, if you can share the capacity utilization and the customer-wise revenue breakup for quarter 3.
Happy to do so. In terms of for quarter 3, you said, right?
Yes.
Yeah, quarter 3, if I look at customer orientation, our largest customer now is TVS Motors, which is at 30%. Hero MotoCorp is at 19%. JCB is a little less than 9%. Bosch is 4.6%. Royal Enfield is about 4%. Honda is 3%. Autoliv is 2.7%. TRW 2.5%. Honda Cars 3.3%. Tata Hitachi 1.7%. Kobelco 1.4%. Tata Motors 1.2%. Overseas is 2.5%. And other domestic are 15%.
Okay. And what is the capacity utilization level?
Where capacity utilization is concerned, you are aware that we have set up new projects. In some of these new projects, which are in the domain of casting and sheet metal, we have crossed the mid-level capacity utilization. Where our proprietary items are concerned, this requires incremental capacity growth whenever we do. So the additional capex required is very, very incremental and small. This is something where we can grow capacities very, very quickly. But in terms of large projects, Romania, for example, is still underutilized. We are still at a level of maybe 10 to 20%. That's where the growth will also come in. But in terms of the sheet metal plants and the other casting plants in India, I think those have crossed levels of 50 to 60% already.
Okay. And so as we talked about the EV projects that we are developing new products, any progress in terms of engagement with the clients or product launch timeline, if you can share?
Well, we have one product that should be launched. So we are starting production of this. Probably trials are now going on as we speak. We hope to launch in the first quarter of the next financial year. We already have 2 customers who we are engaging with. In fact, pilot lots have already been sent, and we are in the process now of waiting for that company to go in for mass production. As soon as that happens, you will hear the good news. Unfortunately, I'm not in a position where I can give you the names of the customers right now.
Okay, sir. And the last question is that if you can share your outlook for Q4 in terms of that, what kind of feedback you are getting from the customers regarding the production levels, because we have union elections union elections are coming there. And second, that overall your outlook for FY24.
Outlook for FY25?
Quarter 4 and 425, both.
Okay. Well, I'm not, we don't normally give too much of future guidance, so I won't be able to give you numbers. All I can tell you is that the quarter seems extremely strong. You are aware that even in the history of the company, the fourth quarter has always been the strongest quarter, and I don't see anything changing there. We expect a very robust, strong quarter, which will probably be better than all the other quarters. Right now, the pipelines are full, the order lines are full, and we are working with the full energy to be able to deliver those product lines to our customers. Like I said, you mentioned the elections coming up.
Yes.
we do expect that there would be a little bit of a pullback in terms of commercial vehicles. But in terms of the areas that we form our largest base with, which is two-wheelers or even passenger vehicles or construction equipment, I don't see too much of a pullback there. So for us, we expect that the year 25, while we are getting some ideas from the customers which talk about a late single-digit kind of growth level in passenger vehicles, and even slightly higher for two-wheelers, we'll have to wait and see. But irrespective of what the market is, where Sandhar is concerned, because we are on a path where we are increasing the wallet share per customer, our growth will definitely be much, much higher.
Okay. Okay. Thank you, sir. That's all from my side.
Thank you. And the next question is from the line of Pranay Roop Chatterjee from Burman Capital. Please go ahead, sir.
Good morning, sir. Am I audible?
Yes, you are, Pranay.
Great, sir. Good morning to all present again. Sir, I'm new to this business. So if you could just, recently in the last 9 months, I saw that there's a good uptake, especially in the die casting, sheet metal, and in the other segment, right? So die casting and sheet metal, obviously, have been building capacities, new plants over the last couple of years, and those are filling up right now. But if you could just provide a brief commentary on what is driving the demand side on some of these incremental capacities, right? So creating capacity is one thing, and then you fill that up. What is essentially filling that up? What is causing for you to gain wallet share in some of the segments? And if you could just clarify, what is this other segment in your product mix, and why is that seeing a good uptake?
Pranay, let me answer that question by first of all giving you the basics as to why we set up capacity, why new plants are set up. They are set up at the call of the customers. So it's only when a customer says that I'm going to give you the business or this business is awarded to you that we begin the concept of planning and setting up any capacity. So while the capacity utilization, like I said, is at 50-60% for some of the new projects, it is only a matter of time that these are going to be filled up with the orders that have already been committed to us by the customers. And therefore, you will see whether it's the die casting, whether it is sheet metal, whether it is EV, whether it is smart locks, which you are aware is going to be the biggest play in our field from now onwards. The capacities, whatever have been set up, have been done at the behest of the customer. So that was one. The second thing that you spoke about was, I forget, can you ask that question again? Sorry.
The other business segment has shown good growth. So what are the products comprising here, and what is driving the growth?
Okay, you want a detail of all that breakup? Yashpalji, can you take that, please?
Yes, sure, sir. Basically, others, we include tools and dies because we are into tools and dies business. So the one share of tools and dies. Then we have one aftermarket business that is also clubbed with other businesses. We are very well present in plastics business. That is also forming part of the other vertical. And there are clutch and brake panels and others. So this is the breakup of others. I mean, they are not so big verticals. That's the reason we have clubbed them with other vertical product lines.
Got it, sir. And one final question that I had. So in the new products that you're expanding in, which is sheet metal and die casting, what is the, like once the new capacities are optimally utilized, what is the peak asset turn or the peak revenue that you can achieve in some of these segments? So I'm not asking when you will achieve it. It's like basis a normalized product mix that you're producing in those plants, old and new, in sheet metal and die casting. What is the peak revenue potential? And incrementally in some of your core segments, should we expect a more moderate growth in line with end industry? Because you said that the capacities have to be increased incrementally.
Pranay, in fact, we are most bullish always on our existing proprietary lineup. And like I said, there is now a technology change. I had mentioned to you in the last investor call as well to this group, that while mechanical lock costs about 300 to 400 rupees, the smart lock costs about 10 times as much. We are now looking at this new financial year to be the onset of smart locks, and therefore, we are extremely bullish that the existing proprietary businesses that we've had will have a catapult in the multiple times of growth that is likely to happen in the next few years. Where die casting and sheet metal is concerned, I told you that we are running at capacities of 50 to 60%, and you are aware of the revenues in the breakup. That should give you an idea as to what the ultimate revenues could be from these capacities.
So, just a follow-up, this 50 to 60% is on the incrementally added capacities or on overall basis?
No, there is no overall, because you see, we have several product lines, and every product line has a different capacity and a different capacity utilization. So it's impossible for me to tell you as a company as to what our capacity utilization is. Those numbers would not mean anything. In sheet metal, for example, we are at 50 to 60%. In die casting, we are probably at 70 to 75%. In terms of machining, we are at 85%. So there are different lines and different. In Romania, we are only at 10%, but again, it's die casting in some sense. So if you were to break it up geography by geography, customer by customer, unit by unit, then the levels of this capacity, existing capacity and capacity utilization will vary.
Got it, sir. I think I got my answer. Thanks a lot, and I'll get back to you.
All right.
Thank you. Ladies and gentlemen, please press star and 1 to ask question. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead, sir.
Good morning, sir, and congratulations for a strong set of numbers and achieving double digit margin. Sir, my first question on the locking system, you have won many business in this particular segment, especially on the smart locking system. So if you can throw some more light on the potential of these new business.
Well, the potential, Abhishek, is huge, because effectively, after a while, you would see the entire conversion of the two-wheeler industry go into smart locks, which basically means that you're looking at revenues potential to go up by almost 10 times. Now, if India is producing a level of 25 to 30 million two-wheelers is what we are looking to do, then you multiply by that number, that is the potential. However, there will be different kind of hybrid models made for the smart lock as well, which would mean that the range of pricing of the smart locks could be anywhere between 1,200 rupees to 4,000 odd rupees. We are still at a stage where we are doing it customer by customer, and to begin with, I think the adoption will be at a level of 10%. But going forward, it will ramp up very, very quickly. You are aware that happens in most vehicles. Once a new technology or a product line is introduced, it doesn't take too long for that to get horizontally deployed across the sector.
So you have won the business from Honda currently. So can you?
First is some EVs that are coming in, but post that, from next year onwards, we go into Suzuki, which will be the main customer for smart locks, followed by the others.
Okay. And the next question is related with the current date of the company, and what is the debt repayment plan going ahead?
What? Once again, please. I didn't hear you.
How much current borrowings in the company, and what is your repayment plan?
Please.
Yeah. Currently, we are having a gross debt of 553 crores and a net debt of 539 crores, India and overseas together.
So it also includes the short-term dates?
Yeah, it includes short-term and long-term both. Short-term, we are having very small quantum. So largely the term loans that we have taken to fund our expansion plans.
And how much repayment you have done in the FY24, and what is your plan for FY25?
This year, approximately 40 crores we will be repaying as part of the term loan installments. And next year, we are looking something apart from the regular installments, which can be around 58-59 crores. We are also expecting that another 40-45 crores we additionally pay to the bank. So by 100 crores, we are keeping a target. That's it. How the year goes, the coming year goes on.
Okay. And my last question on the margin side, this quarter we have seen a quarter-on-quarter degrowth in the employee expenses, other expenses. So, will it be sustainable? And can we see the margin expansion with the improvement in the volumes in the coming quarter?
Like if you remember, we have, at the beginning of the year, we have given a guidance that we will be focused to improve our margins. And this year we kept a target of going something between 9.2 to 9.5%. So I think we are very well on the track. And for next year also we gave a guidance that 50 cases we will be trying to improve. So we are well there on the track, and coming quarters will be seen as an improvement in our efficiency and also. So obviously the margins should improve.
Okay, sir. Thanks, sir. That's all from my side.
Thank you. And the next question is from the line of Pritish Chheda from Lucky Investments. Please go ahead.
Yes, sir. When do you think this sheet metal capacity of yours, which is a 50% utilization, should be like full utilization?
Pratish, this is going up every month. Every month, we are working on predetermined orders by the customers. As we settle in, we bring stability into the operations. But I'm happy to say that month on month, the numbers are going up. We have the orders. It's about execution.
Is any guesstimate in sense when will you be able to fully utilize them and go for your next round of capex?
Well, at this point of time, we don't have any plans for any more capex except the ones that are already committed. Beyond that, we are not looking at any capex expansion or investment unless the customers come up with more orders. But at this point of time, we largely committed to the investments, and the idea is to utilize the capacities to the maximum and optimize our output.
And sir, what is the status on the Mysore plant? Is it operational?
The Mysore plant is operational. It is still at low levels of capacity utilization. We went into production in that. Yashpalji, when did we start production? You want to answer?
September we started trial runs, and October since October it is in commercial production.
Okay, it's in commercial production. Okay.
Yeah. But capacity volumes are increasing month on month basis based on the customer's requirement. So gradually, next 3-4 months, I think it will be seeing more growth and more volumes. One more thing is we have already integrated our 2 manufacturing facilities into one facility that we promised with our stakeholders that we have already done.
Sorry, I didn't get this, sir.
Actually, earlier, one of our tasks to improve our margins and efficiency was to integrate the manufacturing facilities at some of the common locations. To start at Mysore, we have already consolidated our manufacturing facilities. Our old plant and new plant has been shifted into one single location of new plant.
Oh.
Yeah.
Thank you, sir.
Thank you.
Thank you. And the next question is from the line of Arjun Khanna from Kotak Mutual Funds. Please go ahead, sir.
Thank you for taking my question, and congratulations on a good set of numbers. So, just on the new EV products, so we have identified these 3 products. We haven't yet talked about the capex outlay for the same. So how do you see the roadmap for capex for these 3 products over the next couple of years?
So should I answer?
Yeah. Go ahead.
So, Mr. Khanna, if you remember, in last month, we told that around 10 crores we will be spending in current year to set up the line. And we have kept a target of around 20 to 21 crores initially to invest in this first phase of EV products, these 3 products. So around 10 crores of spending we'll be doing in the current year, and balance 11 crores in next year, and it all depends. If the volume goes up, we might incur some additional CapEx also.
Sir, just to understand, these 21 crores, what kind of asset turn could it have? And in terms of margins, would it be similar to our current company margins?
Well, we are...
It's a very asset-light model, Arjun.
Okay, no, that's what I was trying to understand, sir. Because...
It's a very asset-light model, where you are aware that if you look at any of these products, most of them, motor controllers, for example, the output per piece of supply is quite high. It runs into thousands of rupees. So, and largely what you do is a collation and of components that go inside.
So it's more assembly operations.
Yes, it's more an assembly operation. We do have the advantage as a company because we do a lot of sub-parts ourselves in our other divisions. We do not require the component-based investments. Those are already there. Whether it's aluminum casting, whether it is the SMT line or the PCB manufacturer, whether it is plastics, whether it is other components that we already make. So for us, this particular division would source these from our internal facilities where the capacities are already there, where the investments are already there, and build on top of that.
Sure. So the tougher part would be to recruit clients. Now, on that front, how are we in terms of getting onboarded? I understand in the press release you've talked of validation in the fourth quarter, but do we have some visibility in any company we have won?
We already have 2 clients. Right. There are some who are waiting on the sidelines, Arjun. You are aware that many people got into this business. But we did have the advantage because we were probably one amongst very few who have localized this entire setup. You are aware that a lot of this is being imported as we speak to the existing customers. But going forward, the idea is that it should all be localized and India-centric and not China-centric. And we do the check box there. And therefore, whatever we've done to make sure that everything is localized. So there are plenty of people sitting on the wings. We should start our production and supplies in the first quarter of next financial year. And I think the next time when we speak, I'll be able to give you more clarity.
Perfect. Thank you so much. Sir, the next set of questions are just on the net debt. We have given a guidance of maybe reducing it 100 crores next year. Given our capex outlay, we should be generating a lot more cash flows. So is there any new project or we are expecting working capital to move up for us?
Yeah, basically right now we are not planning any major capex or major expansion. There might be a capex to take care of some new tools and routine activities. 100 crores we have taken on a conservative side because...
Okay, sure.
Yeah, there can be some push-up in working capital requirements, might be for a short-term period. But in case we generate more cash, we will be happy to repay more compared to 100 crores.
Perfect. Thank you so much and wishing you all the best.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Abhilasha from Quantum AMC. Please go ahead.
Yeah, sir. Thank you for taking my questions. So you have mentioned that in sheet metal we have utilization in the range of 50-60%, die casting is about 75%. So when tentatively we are likely to reach full utilization levels in these capacities, and when will we start contemplating about new capex areas? And whenever we start, what will be our focus areas for the expansion?
Abhilasha, thank you for that question. I did mention in a previous question that this capacity has been built based on the order booking from the customer. So it's now a question of execution. In terms of execution, we've reached a level of 50 to 60%. We are hopeful that with the standing orders that we have, we will do an incremental capacity increase month on month, and we are hopeful that by the end of the next financial year, we'll be at levels of almost 90% in sheet metal and die casting.
Sure, sure. And then, sir, for the future expansion in what will be like the metering, sheet metal, die casting, what will be our focus areas? What are clients are indicating in terms of?
Abhilasha, basically, like I said, this all depends on what the customer wants from me. If the customer comes back to me in the next year and says they want an increase of capacity or for more parts to be built by us, we will anticipate and go into a mode of planning and executing of that capacity expansion. But right now, our focus is to utilize the capacities that have already been set up. As Yashpal ji just said, at this point of time, we are not looking at any large capex to happen in the next financial year.
Sure, sure. Thank you.
Thank you. And the next question is from the line of Radha from B&K Securities. Please go ahead.
Savings that we can expect from this exercise from next quarter onwards?
Radha, I didn't get that question. Can you repeat that, please?
The line for the current participants has been dropped. Should we take the next question? Hello? Can any from management
Yeah, sure. Go ahead. Anybody else?
The next question is from the line of Aditya from Complete Circle Capital. Please go ahead, sir. The line for the current participant has been disconnected. We are going to take the next participant. The next participant is Pranay Roop. Please go ahead, sir.
Hello again, sir. My first question is on, I noticed in your aluminum die casting and sheet metal segments, there are a small part of the business there which is focused on ICE, internal combustion. Could you give us a sense on how large that is as on today? Because obviously we know incrementally you are expanding elsewhere, but these segments are also growing. So this incremental business that you're getting in sheet metal and aluminum die casting, what are those? Obviously the products are very, very diverse, but what are those? Which parts of the two-wheeler or a car are these going into? These sheet metal and aluminum die casting parts, and how large is the sort of the ICE specific products in these segments?
Pranay, for us, die casting is die casting, and it is agnostic to the utilization of that particular part. So we make parts for every kind of powertrain. Let it be ICE, let it be EVs, anything. It depends actually on the customer orientation. So if our customers today are making or building more ICE vehicles, we are doing ICE parts. Tomorrow, if they do EV parts or hydrogen parts or biofuels part, we will do those kind of parts. But overall, in the context of Sandhar, our reliance on powertrain is very, very minimal. In fact, the only area that you might be able to pinpoint and say we do any powertrain parts come in die casting, which are absolutely correct. But otherwise, if you look at it, for die casting, it's a question of what you load, what tool you put, and what output you get. So, like I said, we do all kinds. It may be a little difficult for me to give you part numbers and values right now. I don't have them offline. But if you are interested, we are sure we'll be able to put that together and take it offline.
Sure, sir. That is clear. My last question would be more on your internal capabilities. And by capability, I mean die casting is a capability, then you have sheet metal fabrication, and then you mentioned a few which will help you in the EV side of things as well. What are those key capabilities that you will be banking on when you sit at the helm of your company and look at the next, say, 5, 6, 7 years, right? So obviously, you have one plan for the next year that you have to, execute the orders that you have, fill up the capacities. Then you would probably have some idea about the next 2 years. If you fill up these capacities, this is how I'll react the next year. But slightly longer, if you look at your business, which is a lot like a conglomerate given the geographical spread, how are you planning to guide this business over the next 5 years? Which are those capabilities that you're banking on? Like, for example, you said smart lock, smart key system, right? So that penetration increasing could be a good growth driver for your business. Then you have your EV products, where you're trying to figure things out and, start that business, get started on that. So if you could just give a brief on how you are thinking of guiding this business over the next 5 years, because there is a lot of disruption that keeps happening in the auto sector, right? From technology side, volume side, pricing side. So I just wanted to get your thoughts on that.
Okay, let me put it like this. It is a very subjective question, so you will get a subjective answer. We bought a company, we acquired a company in 2006 in Barcelona, which is now called Sandhar Barcelona. This is the oldest die casting facility in Europe. And it came up with technologies, and when we bought the companies, all the patents came along with. You may or may not be aware that the spools that go into seat belts, 60% of those spools worldwide are built by us. Now, what makes it a little different and an entry barrier for the others is that this technology calls for machineless casting. So the parts are taken off the machine, literally buffed and placed in containers that are shipped out to other parts of the world. This is the only place in the world where we have 16 cavity toolings, which is unheard of in any other part of the world. So it is armed with those technologies that we've been gradually shifting and bringing learning into India. As the volumes here grow up, as the expectancy of the quality goes up, and our customers are extremely happy. In fact, if you see the new businesses that are growing in die casting for us, largely come because of the fundamental technology that we hold vis-a-vis many of the others. So I'm giving you one particular example, and in that particular context, if you look at Romania, the new plant that has been set up, our customers who are very, very exacting and demanding, like Bosch or TRW or several others, are now pushing the business that they were doing in China to us, except that they want this to be sourced out of Europe and therefore our plant in Romania. Now, while the capacity utilization is small there comparatively, but it's again expected to grow very, very rapidly. Based on same fundamentals, we expect that the business in India in die casting will grow very quickly. It's also on the basis of that last year we bought out the entire business of TVS casting machining to us. Now every casting that goes into TVS is machined by us before it goes into their plants. Every casting, whether it is sourced from us or sourced from elsewhere. So it is these technologies and this expertise that is leading us to grow in this particular business.
Fair, sir. Thanks for that.
Thank you. And the next question is from the line of Radha from B&K Securities. Please go ahead.
Hello.
Yes, Radha, I can hear you.
Yes, thank you. So my question was that this quarter we have announced a lot of plant consolidations. So what will be the total cost savings per quarter we could expect from such exercise, and could we expect this from next quarter itself?
Yashpalji?
Yeah. So basically, in absolute figure, I mean, we won't be able to provide any savings, but yes, the roadmap that we have given to the market, like we'll be going for a double-digit margins in FY25. So this consolidation is in line with the same, and this will help us to achieve double-digit growth. Double-digit margin growth in the coming financial year, and also continue with the same in the current financial year. So absolute figure-wise, it's not handy with us, but yes, keeping the long-term plans, we have worked out the same.
Okay. So, on the smart locks front, so I think last quarter we mentioned that we also have some orders from Honda. So by when could we start supplying smart locks to Honda? Like Suzuki, I understand from FY25. What would be the roadmap for Honda?
Well, we are expecting that most of these launches will happen in the year FY25-26. We don't exactly have the dates. I know that Suzuki dates have been postponed by a month and a half, but that's about it. I mean, at this point of time, we are in the midst of developing, pilot making, and supplying of these locks. So one would expect that of course, the steam would start to happen somewhere in the second half of FY25.
All right, sir. So lastly, so power and fuel cost for us is about 110-120 crores per year. So we also have announced this quarter that we'll be setting up some solar power plants. So what percentage of our current cost is through solar, if any, and how do we expect this mix to change, and what kind of cost savings could we get in future because of this?
Sure. Yashpalji, we have the details of our solar capacity handy.
So currently, like in many of our plants, we have our own solar panels. But what we have done is now we have entered into a contract with the solar panel, the generation companies, like the CleanMax 2 agreements that we have executed. And furthermore, we will be doing with that. So it's a zero capex investment solar migration that we are doing. Compared to the earlier model where we were installing our own solar panels. So the companies, they are doing the same. And per unit wise, depending on the state power tariffs, but the approximate saving 2.5 to 3 rupees per unit in total power cost.
Sorry, I could not get that number, sir.
The savings due to migration to solar panel, the solar power is around 2.5 to 3 rupees per unit.
All right. Yeah. Thanks, sir. All the best.
It's a zero capex business. We are not investing any capex.
Yes, sir. Thanks.
Thank you. And the next question is from the line of Udit Gupta, an individual investor. Please go ahead, sir.
Good morning, sir. Sir, my question is regarding the Romania plant, sir, that you just said is operating at around 10 to 20%. So when is that expected to scale up?
We expect that scaling up to also happen from now onwards. So we expect an incremental growth in capacity utilization. Going almost every month, you would see some growth coming in there.
And so that plant is mostly in the die casting business?
Yes, it is largely in the die casting business. The reason for that to have gone slow was largely on account of the delay in setting up the plant, which again happened because of the Ukraine war. So the steel and everything that had to be sourced, whether it was building materials and this, that and the other, were all coming from Ukraine, and that got a hit, and then we had to reroute them through Europe and other places, which meant that the project got delayed. The project is now set now. We've started manufacturing, and incrementally now you will see capacity utilization going on.
And sir, regarding a four-wheeler order that you had spoken about the last call or the call before that, it's about an order from Hyundai, sir. When is that expected to start delivering?
We are in development, and again, the launch of that is financial year 25.
Financial year 25. Yes.
Yeah.
And sir, no major capex for the next financial year?
No major capex. Of course, we have maintenance capex. You know, we have close to 47 to 50 plants, overall locations. And maintenance capex, incremental capex, all that happens, but no major plants are being thought of. In fact, Mr. Yashpal Jain just told you that we are trying to consolidate some of the plants where we have two, we are trying to bring them into one, and so on and so forth. So the idea is to bring more optimization of the resources that we have.
So any other further plans of plant integration, sir, apart from the one that you've already done?
We are currently in the process of doing two, one in Mysore, one in Nalagarh. We are also, some of our facilities and land was not utilized. So there is a new plant that's coming up in Khed City. There was one plant that we had which was vacant in Sanaswadi. That's will be used for our cabin and fabrication division. So the idea is to optimize the resources that we've had.
Get your point, sir. And sir, regarding your point about the elections, at that time my voice just cracked that time. You just said that during the elections, this off-road vehicles market goes a little down. So what was that point?
I said that the commercial vehicle market, if you look at history, drops down a little bit, and we expect that to be the case. Should happen. I'm not saying will happen, but likelihood of that in terms of history, there is a drop in commercial vehicles. So financial year 25 may see a drop in the commercial vehicle space, but overall the industry per se would grow in maybe late single digits. We at Sandhar, of course, will do multiple times that on account of the fact that we are utilizing and increasing the capacity and the wallet share with our existing customers.
And so the two-wheeler market, you're not expecting any slowdown after the elections?
I don't think so. On one end, it's a catch-phase situation where the two-wheeler market has started to become a little more robust than it was in the previous years. And I don't see that particular movement to be impacted too much with the election.
Thank you so much, sir.
Thank you. And the next question is from the line of Ajay Kapadia from Motilal Oswal. Please go ahead, sir.
My question has already been answered.
Okay.
The next question is from the line of Aditya from Complete Circle Capital. Please go ahead.
Hi, sir. Sorry, I got dropped out last time. Congrats on a great execution. I'm very happy to see double-digit EBITDA margins. Wanted to ask you what is the kind of steady-state margins that we would see going ahead in the business. And my suggestion was, if you could organize a plant visit, nothing like it. Thank you.
So first of all, your plant visit, very happy to have you here with us. Please send us an email and we will organize it as per your and our convenience. The other question that you said was on double digit and what the potential is. We believe that the potential of the company is to probably be in the region of 12 to 13% margin is possible. We used to have those margins and higher, especially in the proprietary businesses. However, you are aware that in commodity businesses of sheet metal and castings, it becomes a little difficult. But on an overall holistic platform, 12 to 13% is possible. We had gone down that margin stage because of the fact that we were setting up several plants and doing a lot of expansion, where because of the support of the existing facilities, some expenses are marked towards the current P&Ls. That portion being over now and an expansion being in place, we expect consolidation to start happening and our margins coming back to levels which we have already crossed double digits. We expect this to keep improving as we go forward.
Thank you, sir, and all the best.
Thank you.
As there are no further questions, I would now like to hand the conference over to management for closing comments.
Thank you, Abhishek. Thank you all the participants today. Let me close by once again reiterating that all our 4 sheet metal plants at Nalagarh, Harol, Attibele and Mysore are in mass production now and growing month on month in terms of volumes. The machining for casting plants at Hosur and Mysore are also operating at almost full scale now. To meet the increased capacity for casting components, the company is expanding its capacity in Western India, utilizing one of the facilities or the lands that we already had. This is expected to commercialize by July 24. The major focus would be to tap the passenger vehicle and OEMs in addition to two-wheeler and the commercial vehicle. The focus areas for the company are largely to be generation of more free cash flows. We want to deleverage the balance sheet. We want to improve the return on capital employed. We want to improve the operational efficiency and reduction of costs. We want to control on the new CapEx and maximum utilization of CapEx that has already been incurred. We want to integrate the manufacturing plants that I mentioned earlier. And obviously, our continuation of diversification of product portfolio, expanding customer base and increasing content per vehicle as one of our directions for the company continues. And this will catch even more speed as we go towards the next year. With that, I want to thank you all. Thank Daulat Capital and Abhishek for putting this together. God bless and all the best.
On behalf of Daulat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.